You see the LBMA saying, the Bank of England, yeah, we got to go to 8 weeks instead of 1 day. Sorry, we don't have enough trucks or manpower. Something is going on with gold and silver. Again, the price is the greatest tool of misdirection. And it's a high stakes game. You have the biggest banks in the world. It's an existential threat to their survival. To me, the term asymmetrical comes to mind when I think of silver, the lowest downside with the best upside. But you better have strong fingertips and better be able to tune out the noise, because the noise will drive you insane. And the long-term technical fundamentals look extraordinary. This huge cup and handle, and it's just about to break through a declining wedge, a very bullish technical factor.
Silver is once again under the spotlight as prices near $33 per ounce, climbing steadily but still lagging behind the 2011 highs. Silver's unique dual role makes this rally different, serving both as a precious monetary metal and a critical industrial component. Industrial demand is surging with global shifts towards renewable energy, electric vehicles, and advanced electronics. The Silver Institute forecasts that solar panel production alone will consume around 180 million ounces of silver by 2025, representing nearly 15% of the annual mine supply. This relentless demand growth underscores silver's fundamental strength, yet its market price remains curiously muted, sparking questions about underlying dynamics. Andy Schectman, CEO of Miles Franklin, highlights a key reason for this disconnect: the long-standing practice of price suppression through paper trading. For years, powerful financial institutions have leveraged futures contracts and derivatives to exert disproportionate influence over silver prices, deliberately capping upward movements. This artificial control allows them to accumulate large amounts of physical silver at discounted rates quietly. Recent market data reveals that physical silver deliveries are hitting record highs, with over 13,500 contracts delivered in May 2025, marking an unprecedented surge in physical offtake. Yet, despite these bullish fundamentals, Andy sees that the spot price has barely responded, clearly reflecting the dominance of paper markets over genuine supply-demand dynamics. This imbalance between paper silver pricing and physical market realities is growing increasingly unsustainable. As industrial consumption accelerates and physical inventories tighten, the manipulation mechanisms face immense strain. Historically, such suppressions have a breaking point. When delivery obligations can no longer be met without hefty premiums, markets are forced to reassess true value. This looming supply crunch, coupled with relentless physical demand, could trigger a violent repricing of silver. The situation is reminiscent of previous turning points when visible shortages forced a sudden and sharp market awakening, rewarding those who positioned themselves early while others were left scrambling. Now, we present the clips from Andy's interview with Kai Hoffman. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Certainly, India is continuing to accumulate gold, and maybe it's just too new and hasn't really broken out into something more than some skirmishes. Maybe if it were to become evident that this is getting very scary, it would, and it should. I mean, look, in the West, the market is too reactionary. You could argue that the folks in India and in China and that part of the world have been accumulating so much gold and silver for so long that it has less of an effect over there than it normally would. It should manifest itself here. And what do we see instead? We see people moving away from the risk-off trade into the risk-on trade. And it just goes to show that the masses are typically always in the wrong place at the wrong time. And that's why guys like Rick Rule, who have made a fortune, have done so as being a contrarian. And he's famous for saying, if you're not a contrarian, you'll be a victim. Well, right now, that is kind of what the world is saying. And I wouldn't look to the gold price, which has been for a very long time managed for several reasons, although I would argue that they've lost the ability to manage gold. Not yet silver. I would argue that China is controlling gold more than the West is ultimately. And so, rising gold is something that doesn't benefit any of these players really rising gold yet until the final resolution or the final understanding that if you don't get whatever isn't nailed down, it's too late. Well, we're not there yet. but I wouldn't look to that. I think that's maybe slightly misleading, and maybe it's not as severe as we are being led to believe, since there is a pause. Cooler heads are prevailing. Let's hope. But everything that I've ever noticed about war, Kai, is that we would think the price should be going higher, and the players that like to manage its price, well, they will delink that rationale. They will delink the people's belief that when things get scary, you should run to gold, and they do it by shorting the paper price. And it kind of, don't look here, just keep on walking. And I would argue China's involved in that too. They want to continue to accumulate as much gold as possible. So by shorting the price during these conflicts, or not allowing it to run quite the way that it should as a result of it, makes people think, yeah, maybe I should buy Bitcoin instead, or buy something else. At the same time, they're doubling down their own accumulation efforts off of a lower price. So that's been kind of part of the playbook for a very long time, and ultimately will accentuate itself. But the immediacy, and that's just it. People in this country are always looking for a reason. Well, that, the market went down because, for this reason. Oh, well, that's great. Now I feel better. There's a lot more to all of this than just something like a skirmish between two angry nuclear powers. That's bad enough as it is, but maybe if it broke into something far more frightening, we would see gold finally start to move as a result of that.
Over recent years, a noticeable shift has occurred in the silver market, with banks quietly offloading substantial quantities of the precious metal to non-bank entities. This strategic move suggests that banks may be increasingly cautious about silver's long-term value or role in the evolving global financial system. The decision to offload millions of ounces of silver could signal a retreat from the market by major financial institutions, potentially driven by concerns over its increasing demand and future price trajectory. According to Andy Schectman, this move by banks raises questions about the stability and future of silver, as it highlights a significant departure from traditional market behaviors. These sales have taken place without much public awareness, which points to a shift in how silver is treated as an asset, moving away from speculative trading and towards more tangible forms of investment. At the same time, countries like China and Russia have been actively securing physical silver, bypassing traditional market structures and seeking to strengthen their reserves. Their aggressive purchasing strategies reflect a broader trend of nations recognizing the value of silver as a strategic asset. These nations bypass conventional financial exchanges and move directly to the source, buying up large amounts of silver in its raw form. This shift underscores the growing importance of physical possession in today's market as countries seek to safeguard their financial future amid global uncertainties. By prioritizing physical silver, China and Russia are signaling that they are positioning themselves for a new phase in the global economic landscape, where silver plays a crucial role in securing economic and geopolitical power.
Silver is still controlled, no question about it. But when you talk about, in terms of the amount of silver that's being accumulated here in the United States, since Easter, at least almost, and I haven't updated it since last week, but since Easter, about 12,000 silver contracts have been delivered. That's almost 2,000 tons of silver. That's not a small amount, and it's not, that's something that should be understood and not glossed over, because the price has not done what it's supposed to do. And I think, people get so tired of hearing that, because it's been that way for quite some time. They perhaps are becoming disenchanted, but yet there's money here in the United States at a higher level that understands what's happening, that is standing for delivery in quantities that we've never ever seen before. I think that, to me, is one of the biggest things that I would focus on. And in so far on the May contract in silver, which is an active delivery month, there has been, let's see here, it's record pace. So far, as of Friday of last week, 13,581 contracts have been delivered. That's an all-time high. And one of the things that is unusual about it is that almost 3,200 contracts, about 16 million ounces, were delivered from the banks to non-banks. Now, we're not seeing the same thing with gold where banks are delivering as much to non-banks since, I don't know, when QE doing, I don't know how far back we go on this, but over the last year or two, the banks have quietly offloaded over 110 million ounces of silver to non-bank entities. Who are these non-bank entities? I'm not quite sure. To me, this screams that institutions like the banks are frightened of silver and maybe are getting out, while others, the industrials or military industrial complexes, standing for delivery on all of this stuff. You can only hold down the price of any commodity or manipulate it over an extended period of time by pushing it in the direction that it is going. You have China doing interviews with Sean Kunkun and others in the resource space have said to me, Andy, China is flying all throughout South America, in particular Peru, and they're buying up all the doré and the concentrate. The doré are crudely refined bars, and the concentrate is a byproduct sludge, paying double what the West will, and sending it back to China for refining. Well, why would the second largest producer of silver in the world need to do that? Buying this stuff and then sending it back, paying over market price and sending it back for refining. Well, it disintermediates the market, disintermediates the price. No one knows how much they're buying, and they go right to the source. Russia says, well, we're going to add it to our strategic stockpile. India has bought over 900 million ounces in the last 5 years, probably more than that. That's just what we can calculate. And so you have massive money that has been using the suppression. If you look at the LBMA, David Jensen does an amazing job of talking about the rehypothecation there. And even though the numbers that I'm going to give you are a little lower because of all the deliveries, last month they had, in essence, 800 million ounces. Now it's down to 7 something now. But 800 million ounces was the entire stockpile of silver at the LBMA, of which 500 million was encumbered by the ETFs, like SLV, like Bullion Vault, leaving 300 million ounces, and the number was 290. And they say that they trade 290 million ounces a day, the entire float, what is available every day. They trade that. However, as David Jensen mentioned, he said, look, they've admitted through surveys of all the bullion banks there that they are trading at least up to 10 times that posted number because they only post the settlement numbers, the final settlement. So that would mean they're trading 2.9 to 3 billion ounces of silver per day, 10 times the float, 3.5 times annual global mine supply, and it's all naked. So this is the existential threat. And if you believe that the banks in the United States have gone long in London, are trying to cover and deliver out of their shorts in the United States, there is a theory out there, Tom Luongo talks about it, that Trump is angry at the European aristocrats and the Bank of England. And this is how he gets back at them, by draining the exchanges and exposing the rehypothecation at the LBMA and blowing up some of these European banks and ultimately the Bank of England. Now, this is a theory. I'm not saying it's mine, but when you look at the LBMA trading these extraordinarily rehypothecated numbers, especially in silver, when you see the banks here in the US kind of looking like they're getting out here, intimating that they're long there against their shorts here. And at the same time, you see the LBMA saying, the Bank of England, yeah, we got to go to 8 weeks instead of 1 day. Sorry, we don't have enough trucks or manpower. Something is going on with gold and silver. Again, the price is the greatest tool of misdirection, and it's a high stakes game. You have the biggest banks in the world. It's an existential threat to their survival. To me, the term asymmetrical comes to mind when I think of silver, the lowest downside with the best upside. But you better have strong fingertips and better be able to tune out the noise, because the noise will drive you insane. And the long-term technical fundamentals look extraordinary. This, huge cup and handle, and it's just about to break through a declining wedge. A very bullish technical factor. We're right there. I guess only time will tell.
Many analysts and investors predict that silver will see significant growth, driven by industrial demand and its increasing appeal as an investment asset. As the global economy continues to evolve, silver's unique position as a key industrial metal and a store of value is expected to position it for continued upside. The gold-to-silver ratio, which remains well above historical averages, suggests that silver may outperform its precious metal counterpart in the near future, particularly as industries like electronics and green energy drive up demand. With the Federal Reserve's projected interest rate cuts, which will likely create a favorable environment for non-yielding assets like silver, many anticipate a bullish market for the metal. Investors seeking inflation protection and a safe haven asset will likely turn to silver as part of a diversified portfolio. As these trends continue, silver's dual role as an industrial and investment asset is poised to fuel strong price growth in the coming years, making it one of the most promising commodities to watch. That's it for today. Share your thoughts on Andy's analysis of silver price suppression in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.